Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I'm charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. And if you like my research and if you want to support my research, you can donate me using this Google Pay and Phone Pay and Paytm. Let's go to the market, how it has closed on Monday. Nifty ended up in the flat positive 14,634.15, 3.05 points in the positive, 0.02% in the positive. Opened around 14,481.05, which is well below the previous closing. Low went around 14,416.25, high went around 14,673.85. Let's go to our prediction review. It is a fresh month and it is the first day of the month, so we don't have the absolute frequency, and our average is also evenly poised, which means evenly poised means all three results are possible. With Nifty has the freedom to move wherever it wants. There is no conditions to close, even though we have certain rules and regulations. Still, on this specific day, whenever we get evenly poised, those rules might not work, but still the high and low will get matched. But still it has a potential to be, because 33.33% chances on all sides. So that is the reason the market has opened in the gap down, but it has broken the high after the gap down. But normally if this kind of gap down happen, it will go bearish and go extremely bearish. But this is the specific day. It has a potential to break and come up some 14,673.85 and close in the flat range, which is once again on the flat 33.3. so it is kind of a day which you need to trade with both options in hand, otherwise it is not going to be easy. And exactly that is what happened. Initially the market given the profit on the put option side, and later stage it has given the profit on the call option side. And you can see the low is not matching in our data, so which means the low new target which has given on Monday. Due to that, if the low is matching means the target will not have. So right now we are having one more lower side target, which is 14,404.32. so this is the one more lower side target we are have. So what happens is, normally the targets are opened, it has to fulfill on the same day or on the next day. This is the first two rules. So it is not hit on the same day, it has gone up, so the pending target is still, so the market will try to reach today. If it is not reaching today, then it will go for example, the first day it is opening means it has to hit on the same day. It is not hitting means it will hit on the second day. So this is the maximum chances of 80% of the time. So first 80% of the time not happened, so second 80% of the time is pending. So today it has to fulfill. Once again, if it is not happen today on Tuesday, then the next set of days it has a chances of taking 5 days, so which means a week, 1 week time. So from the date of given, so it will take minimum of 1 week. So that is the method. So from the day next Monday until next Monday, it has a chance to potential to close in between any day also. That is the rule. It has a certain rule. So we right now have the downside target. On the other hand, we have a certain rule for the Thursday. So according to the Thursday, we can go, and the high is matching in our data clearly. So it has matched 14,673.53. so that is the reason we don't have a positive side target for this month, but we do have a pending target for the month of April as well as March. So we will come to see those kind of levels. We are following and tracking those levels, because of if anything bizarre ups and downs happens, then how long it takes to close those levels. In our group calls, we are clearly given that the warning of the data is having all three results possible, and it has ended up with flat finish. So that is the reason we want to specifically warn the small and safe traders. If they are not ready to invest both side minimum of 10 points, better stay away from the market, because it is from the morning it has done some kind of a volatile, and then it has started to go up after a certain low, and particularly low is not matching as well. And these two target which we pointed out, this is the mistake I have done. That is actually 15,375 last month pending target. So here it is. So on, yeah, that is the lower side target. Okay, this is the lower side target. So these two targets are pending, 13,599, and here it is the higher side target. So this is the April month target which is pending, and this is the month of March. So these two, this is April, this is March. So April and March pending target we are tracking right now. Here it is. So it has been pending for almost 32 days, and the April month target is almost 12 days. So it has reached all those levels. That is where 1, 2 and 5. Normally the 1 week itself it has to close, or then the month, and then the month week, next month of first week. So these are all the levels. If the market is not closing on the first day, then it will go to the next day. If it is not closing the next day, it will go to the fifth day. Up until fifth day it will close. If it is not closing the fifth day, it will go towards to the month. So the entire month it has a potential to close. If the entire month is not closing, then it has a potential to close the next month of first week. So that is the maximum level. If it is not closing, then we don't know when it will close. So this is the method we are following. So 80% of the time the targets, whenever it opens, it tries to close. 20% of the time it fails. So these are all the 20% of the time failed levels, but still it has a good potential to close this week itself, because the fresh new month means that we have a target to close on the fresh month of the first week. So let's see how it is having the chances, because this target we still tracking, because we may not, I mean, we don't know when it is going to close. So we're just tracking how long it takes to close that particular level. So the market is still having the potential to go 15,375 as well. So this is the specific day we clearly warned that the evenly poised market, you need to keep both options in hand. So it is not going to be easy to trade on this kind of day. So what we done is we given initially after the pre-opening itself to buy some put option and call option. These are all the datas are given on 2nd May itself. So these are all the rules which I given, those pending targets. So these are all the rules which I talked about just now, because it has to be the same day or the next day, or it will take the 1 month week time, then it will take the full month. So like that we have a rule. So these are all the two combinations which we asked to buy, 14,100 P and 14,800 call options. So, and our software is also worked pretty well. At the morning itself, we invested only 12K. It has given 3,000 in the morning itself. So we just trying to test the software for the next 2 months, and the call option which we bought it somewhere around 30, and for put option for 45, and we exited call option somewhere in the good price range around 80 odd points. And initially the low is not matched in our data, so we got a target, and this is the key level which we highlighted, because if this particular level is not breaking, then the market is having the chance to fall down. So initially what happened is it's not able to break that particular level, so we got a good chance to book the profit, because this particular level initially it was not able to break. It has kept the high in this particular 3 point range, so market started to fall down from that particular level almost 70 points, and then later stage it started to move. And we bought this particular put option on last week Thursday. So we made a, because our target is somewhere around 400, and uh, if we exited at 400 means we would have got 17,000, but still we asked to hold it for a 1 week time. So whoever holding it, if they exited 500 or 550, they would have made profit of 2000 25,000 to 28,000. That is where, and we still have the pending target of downside, which is 14,404, and this is the last week April month pending target. So we still have the good chance. That is the reason high risk trader, at least minimum 1 lot we asked to hold. And one of our client who made a good profit, it's a huge profit, 5,23,000, he got a profit. I got shocked initially, so that I asked whether it is a virtual money or the real money. He replied it's a real money, because he is a big short player and he used to take huge risk as well. He's made a good fortune yesterday, and we asked to exit this particular 14,000 call option around 78 plus, and people are booked to profit as well. And we found out that the highs got matched in our data, and we had a, so I clearly warned that, because our high is matched on this particular level, which is 14,673. So we had a target of lower side 14,004, not 4.32. So which means we need to play cautiously, but at the same time I asked to buy one particular call option anywhere between 10 rupees, but this is due to 10 to 20, because of we had a volatile market on Tuesday as well. So for a cautious manner we asked to buy the call option. At the same time, 80% of the time it has a chance to hit 0.64% positive side. If it is happening like that, on the positive side means 90 points minimum it will go up. So that time we had the chance to book the profit, but the only thing is, if the gap up opens, then we have had the advantage. If the gap up is not opening, then the premium might erase, but still we are holding the put option as well in the hand, because of the downside target we still have. So these are all the safest way to this is the actual 80% chances of reaching, but after the frequency found, the higher target is same, but the lowest target which decreased a bit around 0.62%. So the minimum chances of positive side having the probability to reach 0.62%, but still 80% of the time it works. So 8 out of 10 it always works, but 2 times, which means 20%, there is a failure ratio. So we still might have the chances to fail today, because of downside target we are having 14,404. So the market might have the uh, chances to go down. So if it is happening and the certain stop loss levels are not breaking, the market might not go to 0.64% too. So that is the reason we are asking once again to buy both options because of the data which clearly shows the volatile market for the Tuesday, which it has a potential of going up of 0.62%, because the 50% chances of hitting positive side. But still, if it is goes bullish, it might go even 1.82% too, but the clear extreme bullish stop loss need to be maintained. So these are all the support and resistance levels for Tuesday. So here it is the clear indication if the market is want to go bullish, which means this particular volatile level must have to pre-open above that level, then this overall average need to be maintained as a stop loss. So 14,631.47 need to be maintained stop loss. So it has a good potential to go first target of 0.62%, then the bullish target 0.84%, and then followed by resistance level for 1.82%. So it has a good chance if this particular level is not breaking. At the same time, the pre-opening has to be above 38.05 points in the gap up a bit. On the other hand, if the market is opens anything below volatile level which attract the extreme bearish market, anything more than 20 points below, it is attracting the extreme bearish market with a stop loss of overall average the same level, plus we need to add 10 points. 14,651.47 is the stop loss for the extreme bearish market. So extreme bearish market might go to any level on the downside. But on the other hand, if the market is opens in between the volatile range in the pre-market opening, then which means anything below 38.05, anything above 20.47, in between the market is opens, then we have the chances of volatile market. But still it has a good chance to go bullish or bearish if these certain levels, for example bullish level, we need to see this particular volatile level must not to break it. The pre-opening might be open in between, but still this volatile level stop loss need not to break 14,006, not 3.66, not to break, and then we have a good chance to go bullish. Or the other hand, if the market is still open in between the levels and the volatile level 1 is not breaking, which is 14,672. So 14,682.82. So 14,682.20 is not breaking, then we have the good chance to go extremely bearish. So that is where the market is aligning with. So if it is breaking, it will go towards the bullish range as well. So we need to keep both options in hand. At the same time, the par value is indicating that anything pre-market is less than 118, it is attracting the downside target, which is negative target 1 to low, or which means the positive side might go a bit, which is 32 points. The negative target is there with the 32 points positive. It has a good chance to reach that level 14,666, but the downside target is which is 162 up to that level. But still volatile market, it might have the chance to go negative target 2 to positive target 2. So which means even 12 points is also possible if the market is not breaking that 53 on the downside. Still we need to play much more cautiously as well, but we have the downside target. That is the one advantage which we can keep a put option always in hand. And after found the frequency, the 0.71% has changed to 0.62%. So potential of positive side is 90 points, but still it is 80% chances of happening. So 8 out of 10 days it is working. Only 20% it has a failure ratio, so 2 out of 10 it may fail. So today might have that particular failure day. Why? Because we have the downside target, we don't have the upside target. But still, as per the rule, we need to keep both options, because the market might have the chances to go positive side 0.62 minimum, means we would have booked the profit and hold the put option for the market to reach 14,404. So that is the method we are following, because in two side of targets you are getting, you may not know which side of the target the market is first going to reach. So the best way to trade on these kind of days you need to keep both options in hand. These are all the indications for the extreme bullish pre-open must have to be above. You need to keep stop loss here, and anything opens in the positive even 1 point, you need to keep stop loss 14,530. But the stop loss is huge, 103 points on the downside, which is almost looks like a bearish market, but still it has a potential after reaching this particular level. Not breaking means it has a potential to recover. That is where the volatile markets activates. So we need to play cautiously. That is the reason we are telling you need to keep both options in hand, so you have the chances to book profit on the both sides of the market is going towards to each side. And these are all the pending targets which we talk about already so many times, and this is the specific target. This ones we are following. So 14,404, so you can keep anything above that put option. 14,450, 14,500 put option you can keep, means it has a potential to minimum reach 50 to 100 points. If anything gets cheaper, you can buy add-on for this particular week as well, because lower the bet, higher the risk, higher the profit, and the lower the risk. So that is where you can bet on. And right now the SGX Nifty at that point of time, it has shown somewhere around flat positive, but right now it is showing the negative side flat level, negative side of trading somewhere around 17 points, I think 17 or 10 somewhere. It is right now 43 points, so it has moved bit lower. So we had that negative side target. That is the reason we asked to play cautiously with a positive buying of 10 to 20. We need not to go with a huge call option side because of those things. Let's go how it is going to be. Let's see how the market is going to close. Thank you.